Hi guys, today we will discuss Netflix on weekly chart. I will show you how candlestick on weekly chart are so reliable and they can make like great trades. You will be making fewer trades and they will be making like tons of money, easy money without any like effort. Now let me just show you one thing. Example, right here started to fall, right? Once it like made engulfing candles and this is three black rows. After the three black rows, it's exceptionally down. And you'll find that there were no candlestick that was like making an impact or telling you that it's a stopover. Now if you look at it right here, that's a doji candle. Now this is a bullish harami candlestick. See? Big black candle and a bullish harami. But you need the next candle to like make a low. You don't need it to break the lows. Example right here, it made a dark cloud cover right here, this black candle, and then it eventually like fell off. So after a bullish harami, you don't need candlestick to be like going down. It usually happens at the exact low. So if you find a pattern, wait for the confirmation. Now let me show you from here onward. And another thing, right here, engulfing bull, this close is what, 49.98, and we went till 67.48. That's what, $18. That's 33% return within what, 3, 4, 5, 6, 7 days? Just a week and a huge return. That's what the power of candlestick is. Now, the basic presumption is that on the weekly candle, you'll be making more money. Now this is not 7 days because this is weekly chart. So it's a 7-week like stuff. But the point is the return. Do you think you can make a 33% return within a year? That's a doubtful phrase in US markets. But if you look at candlestick, it looks so easy. Now from here onward, we will look what really happens. But if you just look at this green candle, it's eating this red candle. It's a complete engulfing bullish candle, which makes it a bull run. And if you look at it further, it fell off. See? Now, why am I telling you such a confusing scenario? Because I wanted to tell you that there will be things once, like you will be wrong sometimes. You're not like God. So the point is, it made an engulfing candle, but the next day it came down. Now once it came down, it made like problems. You would have thought, okay, it might go up next, but it didn't. Once it went lower, your stop loss on that candle will come in place. So always remember, whichever pattern you are following, either this one or, wait a minute, or this one. It's an engulfing bullish candle. Let's presume, although I always tell you to like wait for the next confirmation candle, but let's presume you bought it here. Then even you'll wait and you will put a stop loss on the low of this green candle or on this red candle. And once that low is breached, you are out of the door. You won't sit in that stock. You will get out. If you're short sell, then it's like money. But if you have bought it, then you're out of the door. Don't sit in that stock. Now, this is a huge, big red candle. That's a huge fall. Now what? Now you will wait on the sideline. This is a small green candle because it's like huge red candle. Now we will wait further. Now this is again a red candle. It's eating this small green candle. You'll stay, wait, 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 wait. And boom. Now this green candle is somewhat eating this red candle. So it looks to be a buy signal. But as always, we will be putting a stop loss on the low of either this green candle or this long-legged doji candle. We will wait. And if you look at it, it just made a red candle and you will get out on the next day. And one more thing, once it opened lower, that was also like telltale sign. There's something definitely wrong. Why on earth will it open lower? And you will get out. But even if you have no idea on how this works, then even once it breaches this low, get out. Now this is a good green candle. See, and it eventually went up. So this green candle would have eaten all this thing. And if you look at it like on the longer horizon, it looks like a double low. One low and two lows. And it eventually went up. Now, I wanted to show you one more thing. Right here. Now, the first thing is, this is an exceptionally green candle. And most of the retail investors, including myself, I usually get confused on buying this candle because basically we all think that it will be falling off from the next day and we might get stuck, and mostly we are right as well. So my point is, if you're confused, don't go in, but wait and you will find another exceptional candle to buy in right here. We bought it here at 64.94 and it jumped up. Boom, it's going up. Boom, it's going up. And it looks pretty good. Boom, it opens up. And if you look at it, there is no moving back from just 64.94. It's what? 123. That's 100% gain. Within what? 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks, 100% gain. 17 weeks is what? 4 months? 4 months and 1 week? No, total 4 months. And you have gained 100% return. Who offers this? No one. And you're not even doing complex calculations. No, like reading reports or anything. Candlestick chart in itself is brilliant. You just need to make sure that the company you are purchasing should not go like bankrupt tomorrow. That's the only case, worst case scenario. Otherwise, you'll make money. It's so easy. Now, let's look further. Boom, it goes down. Now, once it goes down, that's a sell signal. Let me post that icon. Boom, it's sell. It makes a dark cloud cover, but as I always tell you, wait for the confirmation. It again went down. That's not a good move. Now it's again a green eating candle. That's an engulfing bowl candle, and you can buy it with a stop loss on the low. And eventually it comes back but falls off. See? Now, one more thing. Once, let's presume you have bought here at 102.62 and for the next 3 days it goes higher, then once it leaves your station of 102.62, try to put a stop loss. Why risk more money? Why not put a stop loss? What will happen? You will get out no profit, no loss. Break even? That's good. Because if you will look at all the charts that I am discussing, there is always a gold train leaving and you can always hop on it. So why be in a problem? It's simple, easy money. Why not just wait for it? And if you look at it, this is what? Just think. 1, 2, 3, 4, 5. 5 candlestick. That's a bearish 3-method formation. And what does it tell you? Let's zoom out. It is telling you that there is some serious problems in this stock. Next day it makes a brilliant green candle. Boom, bullish. But even if you buy here, remember, this is either it will go like a rocket up or it will create more problems. Boom, red candle. Now, why I was saying either it will go like a rocket or it will have problems? Because as you remember the previous lectures, I told you that once this formation is formed and then it goes up, then the major players who were selling or short selling get stuck, and then as the price rises, he needs to square his shares and get out. Now, in getting out, he will be bidding higher and the price will be moving higher. But what if this player is an important major player? Once the price goes up, he will short sell more. Because there are two methods. Either he will confuse and run for the exit, or he will stick to his guns and fire more. Now right here, it was 1 day, 2 day, and on the third day it went lower. Now I told you that you can buy right here, right? And now I am telling you that this red candle means sell right here. Now remember this bearish 3 method formation. Huge short selling has been done and now it's again coming up. Now if you know chart formations, then you will know this is kind of a double top. First top, second top. Double top means a fall is coming and eventually it does go lower. And if you look at it, once it breaches this candle's low, then it's a hell break loose. Why? Because someone short sold it here and now he is short selling from the top. So it's not just 5 candlestick. It's like all these candlestick combined, so it's like 10-12 candlestick. Now this is a weekly chart, which means huge selling is being done and the price usually falls off. Now if you look at it, it did rise up, but there is no single candle eating this red candle. That's not a good formation. 3 candles eating this red candle, that's not good. It should be 1 candle eating that 1 candle, not so many like candlestick. Reason? Because the buyer should be like a good buyer, a healthy buyer. He should be buying with force, eating the previous day's losses, not like sitting like this, because this means someone is marking the price higher so he can short sell it further. Reason? Because these 3 candles were not successful in eating in 1 candle. It took them 3 weeks. That's not good. It did went higher. Right here. Right here. Now this could be a buy signal as well. But this formation is not good. And if you look at it, it's what? It's again what I call box trading. Right here. This is the top box. This is the middle box. This is the lower box. And the stock is trading in between. Now, let's presume we follow a plan. Now, usually in these circumstances, I won't. But let's presume we do follow. The price goes higher and then it comes back down. So, if you follow it, then put a stop loss. This is a dangerous technique. Why? Because first, these 3 candles told us that it's not a healthy buying, and then it went straight and showed you a buy signal up. So if it would have risen up, you could have expected it to rise till this level. But that's not a guaranteed thing. And once it came back down, then you should have a stop loss on this green candle's low to get out, or on the closed or your buying rate, because market is in a risky form. It's in a straight move, and in a straight move all candlesticks are pointing lower. Because another important thing, this big green candle is not a good thing. Mark my words. Biggest candle, large black body or green body candles are not considered good. Reason? If they only happen to come up once, example right here, and then it falls off. Example right here, and then it falls off. This proves that this green candle was not made for the stock to rise. Now always remember the thinking behind the green candle. Basically, big large green candle, big large white candle means huge buying coming in. Now if I am buying 1,000,000 shares, then what do you think? I'm buying it for what? Next day it will fall off? How idiot I am if I'm buying 1,000,000 shares to get the price run up and then it falls off. Or I'm buying here and when within 3 days it breaks even the low of this candle. How idiot I am if I can't make the stock bull run. That's the thing. Because this means someone who brought the price higher, was not willing to push the price even further higher. He was just making a game plan so that he himself could short sell within these 3 days. He knows that what the player who short sold it here is right, and that's why he's selling it. So big green candle means the future trend should also be higher. If it's not, and suddenly a dark cloud cover comes in or a bearish candle comes in, engulfing bearish line comes in, then it means there is something definitely wrong. Example right here. It's again coming. Why on earth is it coming? It means there is something definitely wrong. Now let's move further. Boom, 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 boom. Now again, it's a green candle, but at the lowest point of our box. Now at the lowest point of the box, if it comes in, then it doesn't mean that much wrong. See, it went higher. So always remember this. Boom. It's again going lower. But these 3 candles didn't cross the low. So it tells us that this fall is also not that powerful. It's weaker. Boom. It comes back up. This is like what I call experience. But if you want to follow your game plan, sell here and buy here. Simple. If it crosses the low of this candle, sell. And then on this bullish candle, buy again. And eventually, you will lead things going up. Now, remember one more thing. This is again a big green red candle. Not good. Now, it's telling you that the price is having problem because on the low, it should run up higher. But as you can see, that highs are starting to get lower. Why? That's the thinking that you have to put in along with candlestick trading. If you're buying and something is not holding up, then it means there is bigger storm coming in. Because usually, if you have seen our previous lectures, we buy and it goes up. It's simple. Once it doesn't go up, get out of that stock and move to some other stock. Why risk it? Because if you look at it, the highs are starting to go lower. I told you not to sell right here and it jumped up. Then the next 2 days it went up and then again it fell off. Now once it fell off, you should have a stop loss again on the low. Because now you are again bullish. You believe the price will be rising higher. So why on earth will it go down? And if it is going down, that is not a good side to be on. And if you look at it further and you don't buy, the price is not making exceptional moves. It did went up, see? But it's what I call confusing trends. Not a good trend. See, it's now again falling. And that's not a good move. Get out. Or wait for the price to get out of this box. Because usually in candlestick trading, the losses are made in the box. So remember this. Thank you.